I see that you say that global trade has continued to grow despite past instances of trade wars. And of course, this takes into account all the fundamentals here. I'm curious how you take a look at this with regards to what's happening fundamentally here, and if you think that we're still going to be okay.
Well, very good to be here. And in fact, that is the slight bit of silver lining here, is that on the whole, although, of course, the period we've studied from 1900 onward has had many instances of protectionism, we have seen that on the whole, global volumes have continued to grow. So it really is speaking to the futility of trying to redirect these kinds of things. The economy ultimately does find a way, and where there is demand, supply emerges. So that is a bit of good news. The bad news, of course, is that in almost every instance that protectionism was attempted on any kind of serious scale, the markets didn't like it. So there was a degree of risk aversion. We've seen that happen now. If this continues, we're likely to see more. One of the more worrying bits is the one time that we did see a very significant decline in volumes was the, of course, infamous Smoot-Hawley tariff in the U.S. And there is certainly some worrying parallels between what we're seeing now, be it a limited scope, be it from desire or ability by central banks to ease in the event of a downturn. Not a lot of them have really rebuilt their cushion. The Fed has to some extent, but not a lot have. We also have the rise of economic nationalism setting a more sort of adversarial tone all around. And that was certainly the case then as well. Right. If you couple that with rising borrowing costs from quantitative tightening, from financing an increasingly large U.S. deficit, certainly the Fed has signaled the bar is very, very high for them to abandon rate hikes, and we've seen that reflected in emerging market asset instability. The parallels are a bit worrying here, and of course the Smoot-Hawley tariff is widely believed to have been a very serious accelerant for the Great Depression.
Now, through the lens of history as well, $200 billion coming online in about 4 hours or so. How does that compare to tariffs in the past? I mean, I know Smoot-Hawley 90 years ago. I guess we have to factor in inflation and whatnot. But how does that compare?
Well, so Smoot-Hawley was a much bigger deal in terms of how much it was covering. This is targeted at a bilateral relationship, not all of the external position for the U.S. And in even that relationship, that leaves quite a bit that's still open. I think we saw last week when this was finally announced as going into effect, the markets didn't really panic because the initial rate was a bit lower at 10% versus 25, at least for now. And some of the goods that we're most worried about, for example, some products from Apple, that was taken off the initial list, suggesting that maybe there is a mechanism here where the administration is being at least somewhat moderated from either the business community or indeed internally from its more protectionist instincts. The concern, of course, is retaliation. When you do this, things can really accelerate very fast. And, of course, we've already seen that as well, at least rhetorically. We've already heard from the administration that if China were to retaliate, which, of course, they already have, there's more coming. And that's really the concern. As with Smoot-Hawley, this can really snowball fast.
Ilya, is there a concern that compared to previous trade wars or trade frictions, we're looking at trading relationships and a level of globalization that's more intertwined than ever before, and therefore the implications for regional economies, for particularly here in Asia, where we are a major trading hub and a supply chain hub, that these repercussions are going to be worse than we've seen before?
That is absolutely a very valid concern and a very serious concern, and I think reasonable, because indeed we are a lot more interconnected. These supply chains are much more dependent on how quickly and easily and cheaply goods can move across borders at various stages of the production process. So that's very much a possibility. Now, when we look at the economies in Asia, they are in particular vulnerable. And indeed, a lot of emerging market economies in general are particularly vulnerable, not only because they are, of course, directly in this supply chain, but because of Fed tightening, they're also facing some credit squeeze concerns as well. And so the vulnerabilities really become very acute if things get off the rails.